Did you know that despite global challenges, Israel's real estate sector saw billion-shekel deals across offices, retail, and housing in the past year? Welcome to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. Let's get right to it. In the past year, Israel's real estate market demonstrated resilience amid ongoing conflict and high interest rates. Major transactions took place across housing, retail, and office sectors, with strategic expansions by income-producing real estate companies and retail groups transitioning from tenants to property owners. Notably, the Melisron Group acquired 100% ownership of Aviv Initiation, marking a strategic expansion into residential construction and urban renewal. This acquisition resulted in a total valuation of 1.25 billion shekels for Aviv Melisron, highlighting the company's growth beyond its core portfolio. Another significant deal involved the Azrieli Group, which acquired a 67% stake in developer Zimak Hammerman. This acquisition, valued at 870 million shekels, delisted the company from the Tel Aviv Stock Exchange. Azrieli's move into residential development alongside its established malls and office towers signals its intent to strengthen its position as a leading real estate player. This strategic acquisition aligns with the growing competition for prime assets in Israel's real estate market. In the office sector, Mivna Real Estate signed a major lease agreement valued at approximately 500 million shekels, with co-working firms Rooms and SwitchUp from the Fatal Group. This deal covers 25,000 square meters in a new 13-story building and adjacent tower in Tel Aviv. This transaction highlights the continued demand for office spaces, particularly in strategic locations such as Tel Aviv. Meanwhile, defense company Rafael Advanced Defense Systems made a significant purchase of office space in the Hassan Arafa complex in Tel Aviv for 530 million shekels. This acquisition of 16,000 square meters across 6 floors showcases Rafael's strategic position as a strong buyer in the office market. This move is expected to enhance marketing prospects for the rest of the Hassan Arafa project. In a notable land deal, cybersecurity giant Check Point, in collaboration with developer Israel Canada, secured long-term lease rights to a parcel in Tel Aviv's Bitzaron neighborhood for 818 million shekels. The plans for this site include a 65,000 square meter office campus for Check Point, residential towers, and retail space, marking Check Point's first real estate acquisition. IKEA. Israel also made headlines by purchasing its Netanya site for 500 million shekels. Previously leased from Harrell Insurance, this acquisition reflects IKEA's strategic shift toward owning key properties outright, underscoring the trend of businesses investing in strategic real estate assets. A new-to-market developer from Georgia has formed a joint venture with the ownership of Corporate Woods to purchase 43 acres of campus land in Overland Park. This acquisition is part of a broader plan to revitalize the area with a mixed-use development, according to a report by the Kansas City Business Journal. The developer aims to blend residential, retail, and office spaces to create a vibrant community hub. The master plan for Corporate Woods is set to transform the landscape with a focus on sustainability and community integration. The project is expected to include green spaces, pedestrian-friendly pathways, and modern infrastructure to support a diverse range of activities and businesses. This development reflects a growing trend of mixed-use projects that cater to the evolving needs of modern urban environments. Looking at a Canadian perspective, cities like Kitchener, Waterloo, and Cambridge in Ontario have also been experiencing similar trends in mixed-use developments. These regions are seeing a rise in projects that combine residential, commercial, and recreational spaces, aiming to create more cohesive and livable urban areas. These developments are not only enhancing the local real estate markets, but are also attracting new businesses and residents to the area. In the United States, this trend continues to gain momentum, with cities like Philadelphia's suburbs witnessing a surge in mixed-use developments. These projects are redefining suburban spaces, making them more appealing to younger demographics seeking a balanced lifestyle that integrates work, living, and leisure. In the suburbs of Philadelphia, developers are increasingly targeting older properties for mixed-use redevelopment projects. As reported by Paul Schwedelson from the Philadelphia Business Journal, These developments are transforming the landscape by integrating residential, retail, and office spaces. The key to successful mixed-use projects lies in combining these elements effectively to create vibrant, community-centric environments. One notable example is the planned redevelopment of the Exton Square Mall. The project is set to revitalize the area with a focus on creating a main street through the middle of the property. This transformation aims to replace traditional retail store formats with experiential spaces that attract visitors and enhance the community feel. Additionally, developers are looking at sites like the 16-acre Conshohocken property and the Upper Dublin Prudential site for similar mixed-use redevelopments. These projects are part of a broader trend where aging malls and office buildings are being repurposed to meet the evolving demands of modern suburban life. Keystone, for instance, has secured $42 million to convert a mall office building into apartments, illustrating the shift towards residential-focused developments. This move is indicative of a larger strategy to reinvigorate suburban areas by introducing diverse living options that cater to a wide range of residents. The shift from traditional retail to mixed-use spaces is not limited to Philadelphia's suburbs. Across the border in Ontario, cities like Kitchener, Waterloo, and Cambridge are experiencing similar trends. These Canadian cities are seeing a rise in developments that combine residential, commercial, and recreational spaces, aiming to create more cohesive and livable urban environments. This cross-border trend highlights the growing importance of mixed-use developments in creating sustainable urban communities that cater to the needs of modern residents. By focusing on integration and community, these projects are redefining how suburban spaces are utilized, making them more appealing to a diverse demographic. In Tempe, Arizona, a notable transformation is taking shape as an office park near Phoenix Sky Harbor International Airport is poised to become a significant industrial hub. According to a report by Jorge Ramos from the Phoenix Business Journal, the developers have successfully navigated a crucial stage in the approval process, marking a pivotal step forward for this ambitious project. The project, known as Sky Harbor Innovation Park, is set to redefine the existing office landscape by introducing a massive industrial complex. This transformation aligns with the continuing trend of converting office spaces to industrial uses, a movement that has gained traction in various markets across the United States. The strategic location of this development near a major airport underscores its potential to become a logistics and distribution powerhouse. As more businesses look to optimize their supply chain operations, the demand for industrial spaces in prime locations is on the rise, fueling projects like Sky Harbor Innovation Park. This shift from office to industrial is not isolated to Arizona. In Ontario, Canada, similar trends are emerging, particularly in regions like Kitchener, Waterloo, and Cambridge. These areas are witnessing a rise in industrial developments as companies adapt to changing market demands and seek strategic locations for their operations. The cross-border relevance of this trend highlights the dynamic nature of real estate markets and the evolving needs of businesses. As industries continue to shift their focus to logistics and distribution, the transformation of office spaces into industrial hubs is expected to continue, driven by the demand for efficiency and strategic positioning. In a remarkable transaction, the Marco at the Cannery apartment complex in Davis, California, has been sold for a staggering $29 million. This sale marks one of the highest per-unit prices achieved in the Sacramento region this year, according to Ben Vandermeer from the Sacramento Business Journal. The complex, which opened last year, is part of the Cannery Project, a development that has been gaining attention for its modern design and attractive amenities. The Marco at the Cannery stands out with its unique blend of residential and community-centric features, aligning with the growing demand for multifamily housing that offers more than just living spaces. This transaction underscores the strong market for high-quality apartment complexes in the region, driven by a combination of limited supply and increasing demand from renters seeking desirable locations and modern amenities. This trend of achieving high per-unit prices is reflective of broader market dynamics seen across North America. In cities like Kitchener, Waterloo, and Cambridge in Ontario, we are witnessing similar patterns with multifamily developments pushing the boundaries of pricing due to their strategic locations and comprehensive offerings. These regions continue to attract investors and developers who see the potential in creating vibrant, community-oriented living spaces. The cross-border relevance of these developments highlights the evolving nature of the real estate market, where multifamily properties are becoming increasingly valuable assets. With the demand for such properties on the rise, both Canadian and American markets are experiencing a surge in investment activity, reinforcing the importance of strategic location and quality development in achieving high returns. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.